In this video, I am going to be sharing with you a powerful trading strategy that you can use to make money in the forex market. Ladies and gentlemen, you are once again welcome to my channel. I still remain my humble self, Austin Ikiru, and you all are welcome to my channel, Ostino FS. I've been sharing with you different trading strategies that you can use to make money in the forex market consistently. And one of my subscribers told me in the comment box that I should do a top-down analysis. I want you guys to understand that a top-down analysis is very important in forex trading. So that is why I said, okay, let me do justice to this particular trading strategy. Now, what is a top-down analysis? A top-down analysis is where you look at the higher time frame to see what the market is doing before you come down to the lower time frame to place your trade. So the top-down analysis will help you to know the directional movement of the market, because you don't want to caught in the wrong move. Because sometimes if you are trading the 15-minute time frame just like me, sometimes you might place a buy trade and that trade will reverse and start heading down, and you'll be asking yourself, what is happening? Is it that the brokers are manipulating the prices? No, it's because you do not know the exact direction of the market. That is why you place your trade, because you saw a long move and you thought the market is in a trend, and you thought the market is in an uptrend, not knowing it was just a retracement. So that is why it is very important that you understand the top-down analysis. Understand it very well before you venture into trading, because if you truly master the top-down analysis, you are going to be making money consistently in the forex market. So in this video, I'm going to be sharing with you a top-down analysis that can help you to make over 1000 pips by risking just 50 pips. Right? Imagine you are holding onto one trade, and that one trade generates over 1000 pips while you risk only 50 pips. That is the power of top-down analysis. Most professional traders are using top-down analysis to know the exact movement of the market, right? So top-down analysis means you look at the higher time frame and then you know the direction of the market, and then you come down to the lower time frame and you now execute your trade. So what do I mean by higher time frame? I mean you look at the monthly time frame, you look at the weekly time frame, then you come down to the daily time frame, the 4-hour time frame, the 1-hour time frame, and then you scale down to the 15-minute time frame. So this is what you are going to learn in this video. So my advice to you guys is to make sure that you watch this video from the beginning to the end. Don't skip any, because the information you are going to learn from this video is valuable, so it doesn't worth skipping. Watch from the beginning to the end so that you understand everything you need to know about the top-down analysis. Now, as a forex trader, you need to understand price movement, and what will help you to do that? Price action. In my previous video, I shared with you a powerful formula that you can use to make money in the forex market as a price action trader, and this is the same formula that I've been using to make money consistently in the forex market. So we are going to use this formula alongside with top-down analysis so that you know how it works very well. So if you want to do a top-down analysis, right, the first thing you have to do is to open your chart, go to the higher time frame like the monthly time frame, and look at the market structure, right? The market structure is if the market is either in an uptrend, downtrend, or ranging. If the market is in an uptrend, the market will be making higher high and higher low. And if the market is in a downtrend, the market will be making lower high and lower low. But if it is ranging, then you can see the highs and the lows, right? And like I said, when the market is in an uptrend, you only look to buy. When the market is in a downtrend, you only look to sell. And when the market is ranging, you can buy and sell because the buyers and the sellers are in equilibrium. So this is what we call the market structure. So you understand how the market moves. Like I said in my previous video, we have the distribution stage, the accumulation stage, the decline stage, right? There are times the market will be in an uptrend. From an uptrend, the market will go into range at the up. From there, it goes down to a downtrend. After that, it goes into a range, and then the uptrend continues or the downtrend continues. So that is why you need to understand the market structure first, right? So when you have identified the market structure at the higher time frame, that is the monthly time frame, the next thing you have to do is to look at your major key levels. Your major key levels are the support and resistance level, right? Like I told you in my MAEE formula, we have the market structure, we have the area of value, we have the entry trigger, and we have the exit. So the first thing you do is you look at the market structure at the higher time frame, which is the monthly time frame. You look at the market structure. Then after that, once you have identified the market structure, maybe the market might be in an uptrend, in a downtrend, or the market is just ranging. So the next thing you have to do is to look at the key levels, the major key levels. So the major key levels is the support and the resistance level. So you use a horizontal line to map out the support and resistance level. After doing that, you come down to the weekly time frame and then look at the market structure again at the weekly time frame and see whether if the market is in an uptrend, downtrend, or ranging, right? If the market is in an uptrend, downtrend, depending on how you see it, you know the general movement of the market. So if the monthly time frame is in a downtrend and the weekly time frame is in a downtrend, you can write down the market moves is downtrend. So you have gotten two confirmation that the market move is in a downtrend. So after identifying the market structure and you identify that the market is in a downtrend, you can write it down with a pen on a sheet of paper. The market is in a downtrend because the monthly time frame tells me that the market is in a downtrend, and the weekly time frame also told me that the market is also in a downtrend, right? So you write it down. The monthly time frame, the market is in a downtrend. The weekly time frame, the market is also in a downtrend. So you have already identified the key levels, the major key levels of the monthly time frame, which is the support and resistance level. Since you have identified the monthly time frame and you have seen the market structure telling you that the market is in a downtrend, then you look at the key level, the major key level, which is the support and resistance level, and you use your horizontal line to mark it. So after marking the major key levels in the monthly time frame, you can now scale down to the weekly time frame. You look at the market structure and confirm that the market is clearly in a downtrend in the weekly time frame. Then what you do again, you look at the major key level in the weekly time frame. And what is that? You are looking at the support and resistance level in the weekly time frame. Sometimes the monthly time frame and the weekly time frame collaborate together. That is to say, the key levels you see at the monthly time frame normally rhymes with the weekly time frame. Like if you draw the monthly time frame key levels, right? If you come down to the weekly time frame, you see that the key levels are still the same. So that is why monthly time frame and weekly time frame are almost working together. So that is why I call them the major timeline. That is the highest time frame while trading the forex market. So once you have identified the key levels, right, the major key levels in the weekly time frame, right, and you have drawn your support and resistance level, then you can now go down to the daily time frame, right? So what are you looking at the daily time frame? You look at the market structure at the daily time frame. Is it in an uptrend, downtrend, or ranging, right? So it will not tell you. If the daily time frame is in an uptrend, it means it's just making a retracement, because the major levels, which is the weekly and the monthly, tells us that the market is in a downtrend. But if the daily time frame is in a downtrend, that gives you 3 confirmation that the general trend of the market is still down. Why? Because the monthly time frame is in a downtrend, the weekly time frame is in a downtrend, and the daily time frame is in a downtrend. So you have 3 confirmation that the market is in a downtrend. So the next thing you have to do is to look at the minor support and resistance level. That is the minor key level, right? You look at the support and resistance level in the daily time frame. We call it the minor key level. So after plotting out the key levels, like using the horizontal line to map out the support and resistance level in the daily time frame, what you do next is to move over to the 4-hour time frame, right? Now when you look at the 4-hour time frame, you look at it clearly and know what the 4-hour time frame is telling you. Is it in a downtrend, uptrend, or ranging, right? You look at the market structure of the 4-hour time frame. So if the 4-hour time frame is in an uptrend, it's making a retracement, because the major movement is down. Why? Because the monthly time frame, the weekly time frame, and the daily time frame are all in a downtrend. So if you spot the 4-hour time frame in going up, it is a retracement, right? It is a retracement because the general trend is down. But if the 4-hour time frame is going down, it tells you that the general condition of the market is downtrend. It tells you that the market is in a downtrend, right? Because the monthly time frame is going down, the weekly time frame is going down, the daily time frame is going down, and the 4-hour time frame is going down. So you don't need a prophet to tell you that the market condition is purely down. That is, the movement of the market is down. So once you've confirmed the market structure, that the movement of the market is down, the next you have to do is to look at the minor key levels at the 4-hour time frame. And what is the minor key level? The minor key level is the support and resistance level. So you plot out your horizontal line again and map out the support and resistance level at the 4-hour time frame. After mapping out the key levels of the 4-hour time frame, that is the support and resistance level, the next thing you have to do is to move down to the 1-hour time frame, right? So you look at the market structure. What is the 1-hour time frame telling you? Is it heading up or is it heading down, right? If you identify the 1-hour time frame and see that the market is going up in an uptrend, it means it's just making a retracement, because once it gets to the major key level, it will definitely reverse. So you know that the market is making a retracement. If the 1-hour time frame is heading up, it means it's making a retracement, right? But if the 1-hour time frame is going down, it means the market is in a strong down move. It means the market is what? The market is in a strong down move. The market is heading down, and the general condition of the market movement is downtrend, right? And you are only looking to sell because the monthly time frame, the weekly time frame, the daily time frame, the 4-hour time frame, and the 1-hour time frame is telling you that the market is going down. So you cannot conclude within yourself that the general condition of the market is down. The market is clearly in a downtrend. Then you cannot scale to the last time frame that you can use in this strategy, which is the 15-minute time frame, right? When you get to the 15-minute time frame, what you do is you look at patterns, right? You look at patterns, something like candlestick pattern, chart pattern at an area of value. So when you look at the 15-minute time frame, you also look at the market structure. Is it going up or going down? If it's going up, it means it's making a retracement, and if it's going down, it means the trend is still going. So what you have to do is you plot out your horizontal line and map out the minor key levels at the 15-minute time frame. That is the support and resistance level at the 15-minute time frame, right? So once you have mapped that out, you now look at the candlestick pattern and see the reaction of the market or the price at the key levels, right? So you have already confirmed that the market is in a downtrend. What you're looking for now is an entry trigger, right, for you to place your trade, right? So where will be your entry trigger? At a key level, right, of the 15-minute time frame. So when the price gets to the minor key level of 15-minute time frame and you see something like the inverted hammer or the bearish engulfing pattern at the minor key level, you cannot place your trade. Why am I saying this? I'm looking at how you can be able to use 50 pips, right, to be able to make 1,000 pips or 2,000 pips. That is why I'm scaling it all the way from monthly to 15 minutes. So that once you get the key levels at the 15-minute time frame, you'll be able to position your trade, you'll be able to place your trade at the best entry. In other words, you can call it sniper entry, right? So that once you place it, bam, and you put your 50 pips stop loss, there is no way the market can get there, right? Even if the price makes a move, right, it will just go small and then reverse and continue going down, right? That is why I said in the 15-minute time frame, you look at the key levels, which is the support and resistance level, and then you look for patterns like candlestick patterns. Like it can look like, since it's a downtrend, you can look for the shooting star, or in the other words, you can call it the inverted hammer, or you can look for the bearish engulfing pattern. So when you identify this candlestick pattern at the key level, that is the resistance level, because the market is in a downtrend, then you can be able to place your sell trade and put your stop loss above the resistance level. So this is how you trade the top down analysis. So what I'm going to do right now, I'm going to head straight to the TradingView platform and show you how I trade using the top down analysis, so that you guys will understand these strategies very well. So right now we are on the TradingView platform, right? We are on the TradingView platform. So to trade this strategy is very simple. So what I'm going to do right now is that I'm going to delete all these levels, right? This is 15-minute time frame and we are trading gold, right? Because I told you I normally trade with a 15-minute time frame as a day trader. Why do I use 15-minute time frame? For me to be able to know the movement of the market in a day, so that I can get my small pips, right? So I'm going to delete all these levels, so that we can now show you example of how you can do the top down analysis. So I will delete all these key levels so that the chart will be clean. Remember what we are looking at is the price action. We are looking at the price action. So I will delete all the key levels, good, right? Okay, delete all the key levels. All right, so I'm going to hide this moving average. I'm going to hide it so that the chart will look clean. All right, now we are in a plain chart, right? You can see that the chart is plain, there's nothing there, everything is clean, right? So if you want to do the top down analysis, the first thing you have to do is to move into the higher time frame. Now we are in gold, so we simply go to the monthly time frame. Now this is the monthly time frame. You can see that I still have my major key level there already, which I plotted since, right? So if you watch clearly, this is a monthly time frame. This is a monthly time frame, and if you look at the market condition, you see that the trend is up, right? The trend is up, right? Look at the movement. right? You see that the trend is up. The monthly time frame is telling you that gold is going up, right? So this is the monthly time frame. The trend is up, right? So now that you have confirmed that the trend is up, so what do? You look at the key levels, that is the major key levels, the support and resistance levels. Now I've already mapped out the first key level I have here. So I've mapped out the major key levels I have here. Now we have the, okay, so these are the key levels, right? Can now put it, boom. Then you can simply lock it. This is a lock. You lock it so that in case if you're moving your cursor, you can't be able to take it away, right? You see, it can't move. So you have already locked the major key level, which is the resistance level. Then you look for another key level. I think this is it. This is the next key level we have here, right? This is the next key level. Right? So you have gotten the resistance level and the support level. Like I told you, the market was clearly in an uptrend, right? Then suddenly the market got to this major key level, this major resistance level, and couldn't break through it. Now if you watch, if you check the date, right? Look at this, look at this. If you check the date very well, right? Look at the date I'm talking about. This date, okay, let me make it understandable. Okay, if you go to this date, yes, okay, let me use something that will make you to understand what I'm talking about. Let's use the cross. All right, now this is when the price reached this key level, this resistance level, right? Because the price was clearly in an uptrend, right? The price was clearly in an uptrend. It was going up, going up, going up, going up, going up, going up, then got to this level, then reversed back, right? Came to this level, went up a little bit, then came down again, right? Now the price went back to this level and broke this level, because formerly the price broke above this level, then came down here to retest the level, went up again, then broke below the level, right? And then was going down, and then reversed from here, and then went up again, right? So this is the key resistance level that the price got to and couldn't break through this level, right? The price got to this key level and couldn't break this key level, right? Which now makes it a major resistance level. That is why I map it with the horizontal line as the major key level, resistance level. So if you watch, you see that, so it was in August 3rd 2020 that the market got to this level and couldn't break through it. The market was clearly in an uptrend. If you watch, this is it. The market was clearly in an uptrend. Just look at the movement of gold, right? In the monthly time frame, the market was clearly in an uptrend, then got to this level, couldn't go any further, came down, come up again, then came down here, right? And this level becomes a support level. You can still mark it as a support level, a major key level. So this is also a support level somewhere here. I think this is also a support level. You lock it, right? Now the market got to this support level, then went up again and broke the previous resistance level, right? Because this was the previous resistance level. The market broke through it a little and again came down, right? Came up again, came down. So if you watch, you will now see that we have at least two major levels here. These are the other ones here. Okay, I think we got it now. Now this is the major levels we have at the monthly time frame. The market was previously in an uptrend, like I showed you here, previously in an uptrend, right? Then got to this level and it couldn't move any further again, right? And then the market went down to this level, right? Then came up again, they couldn't pass through this same level, then came back again to this level, came up again and couldn't break through this level, then came down to this level, right? So this is another support level, previous high, now turn support level. I hope you are seeing it now. This is the previous high, now turn support level. So when the market got to this point, it went up again and then crossed the previous resistance level, which is this one, right? Then also crossed the second resistance level and then made the highest high, which is this level, this resistance level. This becomes the highest high of the market. The price got to this highest resistance level, went down again, then came up to this highest resistance level again and couldn't break through it, right? And then went down again to test this a major support level and couldn't break through it, and then went up again and still couldn't break through this major resistance level. And for that reason, this becomes a major key level. So you can see the market is in a range. The monthly time frame tells us that the market is in a range. That is what we understand now, because the market is stuck in a bus, right? So this is the highest high of the market, that is the major resistance level, and this is the lowest, right? That is the major support level, and this is the minor support level, right? So we have already mapped out the major key level at the monthly time frame, and we have locked it up. So make sure you lock it, right, so that it can be able to move. So we have identified the major key level at the monthly time frame, right? So we now move straight to the weekly time frame. Okay, this is also the weekly time frame, right? As you can see clearly, the weekly time frame is also telling us that the market is also in a range, right? The weekly time frame is telling us that the market is in a range, right? Because I've already mapped out the major key level at the monthly time frame, so we're also going to map out the major level at the weekly time frame. So what are the major levels here? I think this is the major level, right? This is the major level, right? This is the major level because price came here, broke through it, ended up in a wick, right? And then went down to this level, came up here and got rejected here, then went down, right? So this level becomes a resistance level in the weekly time frame, right? So the price went all the way down to this level. So we have gotten the first weekly resistance level, right? So the price now went up to this major level and then came down and then tested it, right? And then went down again, and then the price is there again. So this is our key level, our key resistance level. So after that, we look again for another key level. I think we have seen another key level. I think this is another key level. Just adjust it well. This is another key level, right? So this is another key level. We have gotten another key level. Good. Right now we have gotten two key level. Remember to lock it so that you don't mistakenly move it out from there. Fine, it's locked up right now. So we have identified two key levels at the weekly time frame, right? So this is the first one and this is the second one, right? Let's see whether we can get another key level. All right, and then we lock it up. Okay, I think we have gotten what I'm looking for. Is there any other one we're going to look at? Okay, I think we have gotten it. The first one, second one, third one, fourth one, right? So we have 1, 2, 3, 4, 5. Right? So we have gotten the key level for the weekly time frame, which is this, and this, which is this and this. So we can now move to the daily time frame. We have gotten the key level for the weekly time frame, and the market structure for the weekly time frame is telling us that the market is still ranging, right? So what we're going to do right now is we'll go to the daily time frame, right? So this is the week, like just this one candle is a week, right? This is another week. So this candle is telling us that for the week the market is going up, because this green signifies an uptrend. This green signifies an uptrend, but in a higher time frame the market is ranging, because we can clearly see the highs and the lows. Like this is the highest high and this is the lowest low. But if you look at this candlestick at the lower time frame, sorry for the break in transmission, my network is disturbing me.